If you're looking to generate some passive income, then consider buying some real estate investment trusts. These companies own and operate properties that generate rental income, which they use to pay shareholders. But not all REITs are created equal. So here are 3 super reliable real estate stocks to buy and hold forever. And hey, before we get into the names of these 3 companies, let's be honest. Investing in real estate is a great way to make passive income. While you could buy a rental property, a more passive and lower cost option is to invest in a real estate investment trust, or REIT. These entities own portfolios of high-quality properties that generate rental income. REITs are required to distribute at least 90% of their taxable income to shareholders, which generally translates to high dividend yields. However, not all REITs are created equal. Some own low-quality properties that tend to struggle with maintaining high occupancy rates and keeping rents high. Others are focused on properties that see weak demand. So what makes these 3 REITs different? Well, these 3 have some of the most durable records of paying dividends in the REIT sector. Let's take a closer look. Number 1, Essex Property Trust. First up is Essex Property Trust. The residential REIT focuses on the San Francisco Bay Area, Southern California, and the Seattle metropolitan area. Those markets benefit from durable and growing housing demand. While household incomes are high, home ownership costs are even higher, which drives demand for high-quality rental housing. That benefits Essex Properties Trust by keeping occupancy rates high across its portfolio while driving steady rent growth over the past 20 years. Essex Property Trust's same property net operating income has grown by 126%, which is significantly faster than the 103% average growth rate of its multifamily REIT peers. During the same period, Essex Properties' core funds from operations, or FFO, increased by 276%, outpacing the 126% peer average. These growth rates have enabled Essex to raise its dividend at more than double the average pace of its peers. 216% for Essex compared to 97% for the peer group. Since becoming a public company, Essex Property Trust has increased its dividend for 31 consecutive years by a cumulative 516%. That makes it a great option for those seeking a safe dividend to complement their income. Even better, Essex is in an excellent position to continue increasing its dividend. The company maintains a conservative dividend payout ratio and a strong balance sheet, providing it with the flexibility to continue investing in its growing portfolio by acquiring and developing new apartment communities. Add that external growth to continued rental increases, and Essex's nearly 4% yielding dividends should keep rising. Number 2, Federal Realty Investment Trust. Next up is Federal Realty Investment Trust. The retail REIT focuses on high-quality properties in affluent areas. Specifically, it owns dominant open-air shopping centers and mixed-use properties in the United States. This approach allows the company to charge top-tier rents while maintaining high occupancy rates. This strategy of owning quality over quantity has really paid off over the years. Since 2005, Federal Realty has increased its FFO per share by more than 134%. For comparison, 2 of its larger peers have delivered FFO growth rates of 25% and -14% during that period. That has enabled the company to continue increasing its dividend, which it has done for a REIT sector-leading 58 consecutive years. Federal Realty remains laser-focused on having the highest quality real estate portfolio. It routinely recycles capital by selling properties with limited growth potential to fund new investments in higher quality properties with more upside. For example, the company recently sold a 181,000 square foot portfolio of retail properties on Hollywood Boulevard for $69 million, as well as a 108-unit residential property for $74 million. It used those funds to help buy 2 dominant open-air retail centers in one of the most affluent and fastest-growing submarkets of Kansas City for $289 million. This strategy helps support the REIT's continued growth, which should enable it to maintain its industry-leading dividend. Number 3, Realty Income. Realty Income's mission is to pay dependable monthly dividends that steadily rise. The diversified REIT has been very successful in achieving that aim. It has increased its payment 131 times since its public market listing in 1994. The REIT has raised the dividend for 111 consecutive quarters and more than 30 straight years. Realty Income focuses on investing in properties that produce very stable rental income. It owns retail, industrial, gaming, and other properties secured by long-term net leases with many of the world's leading companies. Net leases require tenants to cover all property operating costs, including routine maintenance, real estate taxes, and building insurance. The landlord also focuses on owning properties leased to tenants in industries resilient to economic downturns and the pressures of e-commerce, such as grocery stores, convenience stores, and home improvement centers. Realty Income's earnings are so durable that it has only had 1 year when it did grow its adjusted FFO per share 2009. Overall, its adjusted FFO per share has increased at a more than 5% annual rate, which has supported 4.2% compound annual dividend growth. Realty Income has grown by using its elite balance sheet to steadily acquire more income-generating properties, and as long as it maintains its current pace of growth, Realty Income's dividend should continue rising for decades. Which stock is right for you? All three of these REITs have proven themselves to be capable of increasing their dividends year after year. They've accomplished this by focusing on high-quality properties that generate stable income. As long as these companies stick to their winning formula, there's no reason to think that will change anytime soon. However, if you want a REIT that offers a little bit more upside potential, then I would go with Essex Property Trust. While its dividend yield isn't as high as the other two options, its dividend growth rate is significantly faster. Essex Property Trust has increased its dividend by an average of 5.3% per year over the past decade. By comparison, Federal Realty Investment Trust and Realty Income have averaged dividend growth of 3.7% and 3.1% per year, respectively, over the past decade. That means that Essex Property Trust's dividend is likely to keep rising faster than these other two REITs. Ultimately, though, all three of these are great options for those looking for a safe, reliable dividend to complement their income. Which one you choose to invest in will depend on your personal preferences and investment goals. If you want the highest dividend yield, then Realty Income is the way to go. If you want the fastest dividend,